Joining us now on a CNBC exclusive. First, Energy CEO Brian Tierney. The electric utility has roughly 6 million customers across the Midwest and northeastern U.S. Brian, it's good to have you on. Before I get to earnings, I want to get to the bigger, more macro question that has really been driving utility stocks to record highs this year, and that is AI infrastructure build-out and the insatiable needs for power. Ohio, in particular, seems to be one of those states that is poised to be a big center of these data centers. What are you seeing in terms of demand from possible AI customers, and how quickly can you meet it?
Yeah, so thank you for the question. We're seeing a lot of interest from data centers and others, quite frankly. In terms of load studies, before people locate to our service territory, they ask us to do a load study to see if we can serve them. Load studies of 500 megawatts or more are up threefold this year versus 2023. So last year we had about 17. This year we're up over 60 load studies for large loads in our service territory. And we think that's because of the things, we have the ingredients that data centers and others are looking for. We have land, transmission capacity, and access to water. And they need all those ingredients to have a data center located in our territory.
Can you bring that capacity on? Can you meet that demand without it pressuring prices higher? And I ask that knowing that there's rate settlements in some of the states in which you operate.
No, so thank you for that question. Of course we can. So we have capacity on our transmission system to be able to serve thousands of megawatts of incremental capacity. Where does that capacity come from? We used to have a number of coal-fired power plants across our system that have retired. We have a number of heavy industries that have retired, things like aluminum smelters, and those facilities were located close to significant transmission capacity. So that's what these data centers need, deliverability of electricity. We have that. We have the land, access to water, all the things that they need. And if they're consuming existing capacity, it's actually positive for rates for our existing customers. You're spreading more fixed costs over more units, and that's actually a good thing for our existing customers.
Are cost inputs at this point still a tailwind, given what, say, nat gas has done last few months?
Yeah, so I'd say no. Like, we're doing fine in terms of costs that we have. Energy costs are low right now. One of the headwinds that we're seeing are capacity prices. So capacity prices for the delivery period 25 to 26 increased significantly in the latest capacity auction that we had. And that's going to impact consumer prices by between 11 and 19% across our service territory. So while energy prices remain relatively low, capacity prices are starting to have a significantly higher impact than they have in the recent past.
How about the storms? I wonder whether you think the sort of rash of storm activity we had this summer and fall, does it reset sort of the capacity and transmission story, or is it sort of another year in the United States, on planet Earth?
Yeah, I just think this year was an exceptional anomaly. And you're seeing it not just with us, but with other utilities. A number of smaller storms that impacted our service territory happened, and a lot of those storms were big enough to cause outages, but not big enough for us to defer the cost for future recovery. So we had a significant number of those in places like New Jersey and Ohio. We're going to do everything we can to get our customers back as quickly as possible. We're going to spend the dollars and resources prudently to make that happen. Sometimes we can defer for future recovery. Sometimes we can't. We expect that activity to normalize over an annual basis going forward. We think this year was somewhat unusual relative to our experience in storms.